Welcome back. It is time for another Chicago real estate market update. Home prices are falling across the country. As we close out the year, it's a time for reflection and perspective. And as such, what we're going to do is zoom out a little bit and look at where some of those prices are falling the most and where they're not falling that much. We'll also talk about where the Chicago area fits in. And by the way, if you've got a particular neighborhood you want to know about, because real estate is hyper-local, right? Fill out that form on our website. There's a link in the comments. Plug in your name, email, and the neighborhood you're interested in, and we'll send you a handcrafted custom neighborhood report on the neighborhood of your choice. We'll let you know where prices have been, where we think they're going next based on all the market dynamics that we're seeing. Broadly speaking, the cities where prices are falling the most are west, especially the West Coast. For the past 3 years, and even before that, we've had extremely low interest rates, and that's allowed San Francisco and Seattle home prices to get much, much higher. Because even as these prices go up, as there's multiple offers on a property, buyers are thinking, man, can I really afford another $25,000 to $50,000 more? Well, yeah, when interest rates are that cheap, you look at your monthly payment, you say, hey, it doesn't actually make a huge difference. It's worth it to me to get this place. Remember, these are two cities where tech is an outsized factor in the local economy. And with low interest rates, those tech companies, they have easy access to capital of all different kinds, and they can hire and they can grow. So we've seen tons of people having to move to these areas as these companies hire. Then this spring, the Fed pulled the rug out from underneath them. All of a sudden, we've got high interest rates. Those already very expensive homes in San Francisco and Seattle just got even more expensive, a lot more expensive with those higher interest rates. And additionally, the higher interest rates put the hurt on those tech companies, which we just talked about are a big part of their economies. That has led to layoffs and the fear of layoffs. If you have been laid off or you're afraid you're gonna be, you are not buying a home. And that has caused demand to drop even more in these cities. And as a result, so have the prices. On the other end of the spectrum, cities like Chicago, New York, Minneapolis, Cleveland, interestingly enough. In the case of Chicago and New York City, we're just bigger ships, right? So we're not gonna rise as high on those waves and we're not gonna crash as hard when they come down. Chicago in particular got broad, diverse economies from a lot of different sectors. So tech industry pulling back isn't gonna hurt Chicago as much as it's gonna hurt San Francisco or Seattle. Also, Cleveland has given up probably the least of its home price gains so far. I don't have a theory on that one. If you do, drop it in the comments. And then kind of in the middle is Florida. So Florida, Miami, Tampa, those two cities saw their home prices increase more than anywhere else in the country over the past 2.5 years. And up until recently, they had given back probably some of the least of those price gains. Just in this most recent report in September's Case-Schiller home price numbers, that was the first time we saw them give up a substantial, like around 1% drop in just a month period. So now they're a little bit more middle of the pack in terms of how much they've given back so far this year, but they're up so much that they've got a long way to go. Speaking of being up so much, one thing that's true for almost every city on the 20-city list is that home prices have appreciated substantially over the last 2.5 years, even if you take out the depreciation of the past 4 or 5 months or so. So here's a chart of the absolute high watermark for each city as well as where each city stands today. As you can see, both of those bars well into the positive column, and you can see that some have given back a little bit more that we just talked about, and some haven't given back much at all. You'll also notice that the cities on the right side of the graph that I mentioned, Chicago, Cleveland, Minneapolis, places like that, their prices went up the least and their prices have come down the least since the peak. Really in Chicago, Cleveland, New York, they've barely come down at all. So like I said, perspective. Home prices have gone up a ton. They've gone up even more in some of those West Coast and Florida cities. They've come back a little bit. They've come down more in some of the tech-heavy cities, but in most of the rest of the country, they haven't given up very much, especially compared to how much they went up. Going forward, we're going to continue to see prices stagnate in some of the northern and midwestern cities, and we're going to continue to see them drop in the western cities. What's going to happen over the next 5 to 6 months, though, is that as prices come down a little bit, interest rates are also likely to come down. As I'm recording this, the 10-year T-note has dropped substantially. Mortgages just got cheaper again today. And that's going to make All of this stuff on the West Coast especially look like a deal to buyers, and they're going to catch those deals once prices have come down maybe 5 to 10% and interest rates have come down maybe a point and a half. And that's going to add some support at those levels, and from there they'll likely stagnate a little bit, maybe go up a little bit between the middle and Q3 of next year, maybe fall a little bit in Q4 of next year, and they'll probably just kind of bounce around where they're at now for the next couple of years. In the Midwest and in those northern cities that we mentioned, again, things are pretty steady. Prices went up a good amount. They've come back a little bit. They may come back a little bit more, but they're going to similarly find support pretty close to the levels that they're at right now. And we're not going to see a substantial drop in home prices. Hopefully that gives you some perspective on all the headlines you're hearing about the housing market in Chicago and beyond. If you want some perspective on a particular neighborhood, like I said, fill out that form on our website, link in the comments, name, email, neighborhood you're interested in, and we'll send you that handcrafted report to give you a better idea of where prices are going next. And by the way, it's not all about neighborhood, it's about housing type as well. So if you want to know about single family homes or condos, townhomes, let us know that too. Multifamily, right? Those markets all behave a little bit differently. So if you want some detail on those, feel free to add that in after the city and we can specify a little bit more for you. Make sure to give us a like, a follow, and subscribe to updates. That way you get our next video and you can see if our predictions came true. And we'll see you back here next month for another Chicago real estate market update.